I think there's a bigger upside in owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
In today's analysis, we're navigating a market grappling with AI anxiety, and Fundstrat's Tom Lee provides a crucial perspective. While acknowledging the risk of bubble-like activity in a limited pool of AI stocks, he firmly believes we are still in the early innings of the most important trade in the global economy. However, his most insightful call is on the second-order beneficiaries. He argues that the biggest relative upside is now in the financial sector, as giants like JP Morgan and Goldman Sachs leverage both AI and blockchain to fundamentally enhance their business models. Lee foresees a massive re-rating of their multiples to tech-like valuations, positioning them as a key driver of the market for the next 2 years, regardless of the Fed's near-term actions. Transitioning from market opportunity to monetary necessity.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Investors are really anxious, and NVIDIA has not performed well the last few times it's reported. But the story arc there remains that is one of the most important companies in the world, in the middle of the biggest structural change in the world economy. So I think NVIDIA still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top. You know, from Sam Altman at OpenAI saying that, investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few.
Yes.
And then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, beyond just Figment. And I think, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
That's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's a bigger upside in owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, does the rate picture matter for the bank stocks?
It does, because it provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think the financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JP Morgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
They're aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. There's a large cap stock rally,
yes.
Right? Industrials,
correct.
The biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
You think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's 1 unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I mean, I think what we're, even this quarter, right, the numbers from JP Morgan, Goldman, and the financials, and look at the bullish IPO, these are all good signs to me that you want to be overweight financial.
Jack Mallers presents a stark and powerful thesis. The current financial system is a burning building, and Bitcoin is the engineered exit door. He argues that central banks and governments have openly made their choice. They will finance their unpayable debts at the expense of the people through perpetual inflation. The bond math simply doesn't work. In this environment, waiting for rate cuts or the right politician is a losing strategy. Mallers makes a data-driven case that the only rational response is to stay humble and stack sats. His analysis of Bitcoin's historical returns shows that holding the asset for any period greater than 3 years has effectively a 100% probability of a positive return, making it a statistical certainty in a world of guaranteed debasement.
The size of money is about $500 trillion. It's about half of all the things we own today we've monetized because we've just created value and we just want to bring it with us tomorrow. And central banks and governments have robbed us of that ability to do that with fiat because they print it and they debase it. And so we have to look to alternatives to bring the value we've created with us tomorrow. Bitcoin restores that for everyone. So in the future, Bitcoin's price will rise because all wealth looking to be carried forward into the future will be saved in Bitcoin. And it'll bring down the price of all other market goods that have incorrectly been monetized. If you're my age, I would say stop waiting for the Fed to cut rates, stop waiting for mortgage rates to lower, stop waiting for the right president. Stay humble and stack sats is the only way you're going to be able to raise your kid with a yard. Bitcoin is the only solution that doesn't rely on protests, it doesn't rely on politicians, it doesn't rely on changing someone else's mind. After Powell admitted the bond math doesn't work, the Fed is choosing inflation over collapse. Bitcoin thrives in this trade-off. The good news, we've engineered an exit door. Think of Bitcoin that way. The building is lit on fire, and we've engineered a way out for everybody. Now, the price, the ticket to get out becomes more expensive with time. When I got into Bitcoin, a ticket out was $50. Now a ticket out's $110,000. The cost to exit isn't equal, but the opportunity is. All of you can get out. That's what Bitcoin is. It's an engineered exit door, an engineered life raft. How expensive that trip is for you, that's up to you. But make no mistake, the decision was made in broad daylight. The government will be financed at the expense of the people. Assets will soar, Bitcoin the highest. This is the probability of positive Bitcoin returns per holding period. If you hold Bitcoin for 1 day, you actually have a better chance than not to have a positive return, which is insane. The odds are in your favor just buying Bitcoin today. That's at 53% chance you have a positive return for holding Bitcoin for a day. A week is 55%, a month 57%, but then it starts to get really interesting the longer you hold. If you hold Bitcoin for a quarter, you have a 63% chance of positive return. If you hold it for a full year, 76%. This is crazy. If you hold it for 3 years, 5 years, and 10 years, you effectively have a 100% chance of a positive return. And the point is simple. Stay humble, stack sats, and hold. The future is abundantly clear. Jerome Powell, the federal government, Scott Bessent, Donald Trump, they could not be more clear. The post-$71 is over. It's no longer in our benefit. We are changing global capital flows as we know it. The world is going through hyper change. Everything in the data, everything about interest rates, everything coming from the White House is unequivocally true. And just hold, just relax. My dad has come on this show and he said, markets either try and wear you out or scare you out. Don't let it wear you down. Don't let it scare you out. Just relax, hold on. If the Bitcoin price is really doing that much to your mental health, you got too much leverage. I've said a million times, consume only less than you earn.
Ultimately, the combined analysis of Tom Lee and Jack Mallers provides a comprehensive roadmap for the modern investor. Lee identifies the tactical opportunities within the legacy system, highlighting how foundational technologies like AI and blockchain are creating immense value in undervalued sectors like financials. Mallers provides the strategic, long-term imperative, framing Bitcoin not merely as an investment, but as a necessary lifeboat in a collapsing fiat system. The message is clear. While you can tactically play the evolution of the old system, the only way to truly secure your future is to opt out into a new one. The decision has been made in broad daylight. Assets will soar, and Bitcoin, as the ultimate scarce asset, is engineered to soar the highest.